Hey, Kevin, Chris. Don't know if you guys could hear me. Kind of a new setup. What's up, Fun and James? Sorry to hear that, Kevin. What's up, Brandon? I got a special treat for a few of you who wonder why I wear a headset. You guys ready for this? I hope it's not as bad as I think it's going to be. Prepare your ears. Was there a really bad echo? Because I couldn't hear it. What's up, Mauricio? Jeffrey? Thanks, man. Appreciate that. Ken, what's up, buddy? You guys were wondering, Colt. Ask and you shall receive. Oh, there was no echo? What's up, JB? Oh, well, I've done it before and there's been a lot of feedback. What's up, Doug? Dougie Fresh? Dougie Fresh! I love that name. I don't know. In the past, it would echo and it would screech and everything else, so, you know, I'll go ahead and start doing streams without the headsets and then everything will just go wrong, so. Paul Shizumu, what's up, buddy? Alright, Ken, here you go. Is anything changing? Alright, I took it off. Well, that's odd. Alright, so I did a little bit of homework yesterday. This is the layout. My room is dark, so I don't have a webcam or anything up. And I think that I got 17 stocks here that looked like something that I might be interested in. And, you know, when you come to my Golf Clash streams, you guys see, you know, I have that Robinhood link up there. And Robinhood has, I don't know if I'm supposed to say this. I don't want to get in trouble because I see every other YouTuber say it. But Robinhood is not affiliated with me in any way. I'm not a sponsor. They aren't paying me to make this or anything. But, you know, downloading it was one of the coolest things I've done. I have been seeing my money grow, and we could step outside of these 17 stocks if you guys like this. If investing even just a small amount of money, like right now, I have $100 invested. Not a lot of money. Not very big gains. However, most people blow up their first account, and I didn't blow up my first account. I was actually in the positive until I went crazy and bought 100 shares of Doge, but I still have faith that that's gonna shoot back up. But anyway, before that, I was sitting at about $106 about 12 hours ago, and now I'm sitting at $99.90. And I have $23.81 in buying power, which means that's money that's not tied up in stocks. First thing I want to do is show you guys the stocks that I am in and why. So, and I actually just sold one. Let me see if I could find I'll see if I could find the one that I sold and explain why. But first we'll look at the ones that I'm in. And AMD is not one of them. Not at this moment. LG, Lionsgate's film, and then it's broken down into A and B. I don't know why. So anyway, you see this chart, and you're thinking to yourself, if you don't know much about stocks, you know, there's a lot to learn. Basically, I spent a lot of hours on this. This red line that you see my cursor following here, down here, this is a 180-day simple moving average. And what that means is it takes all these are called candlesticks, and it takes the last 180 of them and it makes an average. And, you know, that's this red line down here at the bottom. Okay, RJ, well then what's the blue line? Well, the blue line is also a simple moving average, but it's only for 9 candles. So here we have 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. It'll take those 9 candles, make an average, and it just gives you a nice little clean line to go by. So this blue one is for 9 candles. This red one is for 180. All right, just in case you didn't know that. And a green candle means that it started at the bottom of the body of the green candle and it closed at the top of the green candle. I am looking at a 4-hour chart, and there is what, I think there's 6.5 hours in a trading day, or is it 7.5? I don't know. Anyway, you know, you'll notice that it looks like probably 6.5 based on where these candles are sitting next to each other. This here, we're going to take this candle. Actually, this is a better looking candle. So what happened here is this candle, you see the body of the candle, it opened right at the bottom of the green thick part. And then it closed for the day, or, you know, for the 4-hour period, right at the top of this green candle right here. And then why do they call it a candle? Because it's got wicks. You see this little nipple up top here, and then you see this longer, it's not really a nipple, it looks more like a wick actually. Well, this is how low the stock went in a 4-hour period, but then it pushed back up. See, it started here, it could have went down to here, and then in which case this candle would be red, and then it pushed back up, and as soon as it passed the open, it turned green, and it pushed all the way up to the top of that little nipple there. And then it pushed right back down just a little bit to close right there. So that's exactly what this candle is. So, and a red candle is the same exact thing, but in the opposite direction. So like this red candle here, what this means is at the top of this red candle is where the 4-hour session began. And the price just went down and down and down all the way to the bottom of what this wick. But then the price started going up again, and it got to this point before it closed. And this is where it closed. So this is open, close, and then this is as far as it got pushed down. But the buyers were like, nope, that, you know, they started buying here. Anyway, let's back out into the bigger, just so you understand a little bit of what you're looking at. Now, you might also be wondering, RJ, what's this red line? I put this red line here. It's called a trend line, but I'm not using it as a trend line. I'm using it as a pinpoint of where I bought in. So I bought in on this day at this price, which is about $13.86 or something like that. Why did I buy in here? Well, let's zoom back out now that we know what all the lines and everything mean. First of all, when a stock is on top of this red line, it's generally in an uptrend, especially if this red line is heading in an upward direction towards the right. So if this stays above the red line starts to move up. As you can see at this point down here, right as it crosses below that, this is considered a downtrend. And if you look from here to here, clearly it's a downtrend. Then there's other tools here, like this is called a MACD, and this is called an RSI. And again, if you guys are interested in this, I'll be more than happy to make videos with everything that I've learned. But these are basically indicators, like the MACD Basically, I'm not going to tell you about the MACD, but the MACD basically told me to get out of the trade right here, which means if I would have bought in at an earlier time, it would have saved me all this money that I would have lost. The RSI is the same thing. You'll notice down here, this is the RSI. See, RSI. Here, it shows in the red, that is, there's two numbers here, 70 and 30. If it goes above 70, it's considered overbought. If it goes below 30, which you see in the green here, it means it's oversold. Well, what exactly does that mean? Well, overbought means that the price is too high. And that's not all it means, but that's the way I'm using it as an indicator. And when it's green, that's why I made it green down here. That means that it's oversold, so you're getting it at a discount. So the chances are, if you buy in the green and sell in the red, what happens? Well, right here is the green. Let's say I bought in here. We'll go straight up because this line, I would have bought right here. Okay? And then if I decided to sell in the red, right here was our first sign of red, so I wouldn't have made much money. But if I would have held on to it a little bit longer, see, there's so many things, because you would think as soon as you got in the red, it's time to sell. So if we went from, let's make a trend line. We went from here, and let's say we bought it as soon as it got into the green, we would have made a profit of 6.7%. And that doesn't sound like a lot of money. It's really not that much money if you have a $100 account, because you would think to yourself, okay, $100, I made $6.70. Well, RJ, that sounds amazing. You did a great job. But it's not really like that, because you don't put all of your money in one investment. So I would have put $10 in this investment. So in that case, instead of making $6.67, I would have made 67 cents. However, if you are investing your money into stocks and you have a larger amount, let's say you have, I don't know, $100,000 in your portfolio. Let's say you've been doing this since you were a teenager. Well, 6.7% of 100, well, not 100,000. You would put in, I think 10% would be the main. So $10,000. 6.7% of $10,000 is pretty good, and it even shows on the screen 15 days, 14 hours in that short period, you made 6.7%. Anyway, that's not the way I actually traded necessarily here. Let's focus. Why did I choose Liongate Films B? The reason I chose it was because I like the trend. It did dip under, but only for a little while. And then from this point, which is November 9th. Uh-oh, James just texted me. Is something wrong? How many nipples per wick? just one. There's two wicks. One at the top, one at the bottom. Is that what you wanted to show me? Can you buy different candles? No, there's only red and green. Sometimes there's a gray candle. That's called like a doji. And dojis are basically the price is the same. The price didn't move, and so there's no body to the candle, and it just, or it opened at $5, went up to $10, went down to $2, but then closed at the same price that it opened at. That would be a doji. So anyway, continuing on, you see this 180-day moving average line is important because the chart we're looking at here covers 180 days. So as you could see, the 9-day SMA kind of follows what our stocks are doing, and we want this blue line to respect and not cross over this red line. So here we see it's respecting it. The bigger the gap from the red line, the stronger the stock is, and then it starts falling down. Okay, fair enough. So here it did not respect it, but then it dipped right back up and it got to the top side of the red line. And then since, what is that, around November 9th, all the way up to today, it has respected this line. Here, it bounced off the line, but as soon as it got to the line, notice it bounced right up. As a matter of fact, it bounced really strongly. Look at that green candle. So, you know, it was hanging out down here by the line, and then they're like, nope, it's worth more money. So I saw this, I bought it, and I bought it right here. I wish I would have bought it sooner, but this is where I bought it. Why did I buy it here? Well, right here, we see this diagonal line I was telling you guys about, and this is the 180-day SMA. I'm like, okay, we're nice and high above it. And then on top of that, you know, it is an uptrend. And unfortunately, what I was expecting or hoping for it to do was that I would buy it here and that we'd get another movement like this. But even if we don't get an exact movement like this, as long as we stay on top of that red line and we keep having upward projections, we're going to continue to make money. As long as this is on a upward projection, you're going to get something that's very commonly talked about in stock markets. And what that is, oh yeah, Shelby, you like that? Yes, it is. Is you want to see a stock that has higher highs and higher lows. Well, what is a higher high and what is a higher low? Okay, well, what we have here is our lowest low. This is our low point, right? Right where the Shelby is, the mouse. And it starts here, and then it goes up to here. This is a high, because then it pulls back and goes down, right? So if this is the low, and this is the high, here's a low, this is a low, this is a high. Then it dips down to this point. This is another low point. Is this low higher or lower than this low? This low is lower, so this low is higher. So we got a low followed by a high, and now the new low is much higher than the other low. So that's a sign of an uptrend. Now this is our old high. This is our new high. You actually could go to the tip of the candle, but your chances of selling, you know, and knowing the exact point when the stock's going to start coming back down again is nearly impossible. Well, it is 100% impossible. You got to have luck. But anyway, this, I'm just going by the 9-day SMA. This is the new high. So this was the old high. This is the new high. Because we have a new high here, now we have a low, a high, a higher low, a higher high, and then look, right here is the next low. That's higher than this low. So now we have a higher low, and then yet again we have a higher high. As a matter of fact, this stock hit an all-time high at 1725. Now, why did I buy in where I bought in? Well, one thing we've been seeing a lot of is respect for the 180-day SMA line. So yes, the stock was starting to come down here, but I was hoping that I was buying the dip. Right here is where I purchased. The stock was coming in, and then you'll notice red candle, red candle, kind of indecisive, but then we had a green candle, and another green candle. So I'm like, okay, I'm going to buy this. I have a feeling it's going to continue to trend up. And what happened? Well, of course, right after I bought it, we got some red candles, some green candles. It's still a mixed bag, but we're still above that line, so I'm not thinking about abandoning this position. Daddy. What's up, Dario? $50 to buy a few months ago, unable to purchase them and forgot. Months later, said it was over 100K. Wow. What's up, Solve? Max Ford, good to see you guys. I'm sorry, I was just kind of in a trance. Kevin, what's up, buddy? Good to see you. I hope, like, I'm not really, I'm newer at this, but I'm not at the point where, like, I don't know if I'm going to make a great teacher. I spent way too much time on this. So anyway, that's one stock that I'm on. And I want to show you a couple stocks that I'm going to buy. So rather than show you a couple stocks that I'm going to buy, I'm just going to go straight to my list. So I wrote them down here. One stock that I wanted to buy is called, the ticker is ABR. So ABR. I wrote all these stocks down yesterday. And one thing you'll notice here is what direction is that red line moving in? It's moving up, correct? And then we can also see the stock is generally respecting it. We have, again, higher highs. Here's a low. Here's another high. It's just barely higher than the other one, but still counts. And then our low is right here, because, again, I'm following the SMA. That's still higher than the low that was here. So higher highs and higher lows bring our stock. If we would have bought in, like if we would have known what this trend was going to be here at $11, we could have sold out at, if we were to sell out right now at this minute, we would have turned $11 into $16. You know what kind of return that is? You don't get that from a bank account or anything. You know, and that's just one share. What if you bought 100 shares, you know, depending on the size of your bank account? But at the same time, the stock could do the exact opposite thing. But anyway, so I'm watching this stock. It's got a beautiful uptrend. It's just continuously making money for people. And I'm like, okay, well, I didn't buy this stock. I'm thinking about buying this stock. So what made me think, am I going to buy this stock? And am I going to buy this stock right now? Well, let's see. I was here yesterday, which is this black column, right? This black column. I looked at the stock. I just showed you why it was healthy. And I'm thinking, okay, let's see. So I came in looking at this and I see, okay, it looks like we got a little bit of an uptrend going here. So what I was hoping to see today, you see this big, long red candle? This is the exact opposite of what I wanted to see. If this candle would have been green today, I would have absolutely snatched it up. But not only did this go below this blue line, which is, again, the 9-day moving average, which I'm okay with. You know, that's going to fluctuate. But for the first time in a while, it also went below the red line. So ABR, I am not interested in buying. And I didn't buy it yesterday because I wanted confirmation. I wanted to see what is the stock going to do today. So ABR is off the list. The next one is ABT. So let's type that in and see if we're going to invest in ABT. Okay, again, we notice that red line, it started at the bottom left of the screen and it's going all the way up to the top right of the screen. This stock is currently sitting at $119.48. Well, RJ, how are you buying that? You only have $100 invested. Well, with Robinhood, you can buy partial stocks on most stocks. So with that, I could buy $10, you know, into this stock if I feel like it's going to go up. I don't have to buy a full share. But again, here we go. Basically, now here's a high. Like this would kind of show a downtrend. Here is a high. Wait, here's a low. Here is a high. And then this low is higher than that one. But then the high fails to get this high again until way over here. And I know you're like, well, what is way over there? Well, this was back in the end of last summer. This is about August, let's call it August 30th. And then it took all the way up to November 8th for the stock to ever get that high again. And as you can see, the best time to buy this stock would have been right here around December 14th and then selling out up here. If you would have bought this on December 14th, you would have bought in for $108 and you could have cashed out at $130. So anyway, what made this stock look like a good potential to me? Well, this stock does go under this red line a couple times, but it really stays really close to it. I kind of see a bit of a uniform pattern when it goes under. And right here, what is it? It's under and it just broke out. So let's take a look at where it was yesterday and what it did today. Yesterday is this black line right here. It was on top of the 9-day moving average. It was well above the 180-day moving average. So today would have been the day I bought. And as you could see in the gray box is when the market is closed. It's called after hours trading or pre-market trading. And after market trading, it went down. Pre-market trading, this is a huge candle, a huge red candle, and it just kept plopping down. So 2 stocks that I've looked at yesterday with the potential to buy. I wanted to wait to see what direction it was going to trend in today, and it just took a dump. So I am not interested in ABT either. So let me just, before I go into the next, I think I got like 15 stocks. Let me just see if you guys got any questions in the chat. I bought my daughters the Christmas Barbie every year. They decided to give them a haircut, so probably not mint condition. Okay. You guys aren't used to me doing stocks, and I get that. I don't know if I'm ever going to do this again. I just wanted to look at my stocks. I'm like, you know what? I keep talking about it in my streams. Let me just bring it to you. Oh, 1K. I'm sorry, Shelby. I misspoke. Fight Club TV says stocks are a complex process of evaluating and scuttlebutting the company's position relative to its competitors. While I'm not going to say that this is what I will say. That is not the way I trade. The way you're talking about is fundamental trading, and that's basically for long-term investing. The way I trade, the reason why it says swing trade in the title is because I like to find stocks that are on an uptrend and then buy them hopefully near the bottom or somewhere near the middle of that uptrend, and then sell them for a profit a couple days later, maybe up to a week or 2 later. So I could really care less the name of the company or what the analysts are saying about the company, unless they're saying, hey, this company's going bankrupt. You know, like Johnson & Johnson, for example. I wouldn't be interested in purchasing them because they had to put their vaccine on pause. So anyway, yeah, I don't see any questions other than that. So I'll just continue. Anyway, ABT is definitely a no-go. Now, am I going to be putting money in AOUT? AOUT. Okay, why did I look at this particular stock? Well, here is our 180-day trend line, and it's on top of it, and it is actually starting to trend down. So actually, I have on here that I am waiting for the bounce. What does waiting for the bounce mean? Well, it's not ready for me to make a decision on. I am not mad that there are 2 red candles here. What I want to see is as we get closer to this red line, which is the 180-day simple moving average, I'm expecting to see a few green candles simultaneously. Let's see what happened the last time we had a bounce. Okay, let's look at this little area here. This is a bounce, right? So here we see these green candles. It was going up, then it was kind of getting weak. This is what's called a pullback, and you see the red candles kind of take over, and now this blue line is kind of heading on the downtrend. Well, I have foresight. I know it's going to go back up, but at what point would I decide to buy back into these? And that's where these different indicators come in. Like, one great indicator is, if you are going to use the MACD, is waiting for the white line. I made it 1 white because white is very easy to see. The other line I made red because red means stop, red means bad. So as soon as the white line crosses the red line, a lot of times that means you can go from looking at a stock like, I'm not going to buy it, to, yeah, I'm going to buy it. Is this indicator 100% right? No, it's not. Because another indicator you could use with it is the RSI. You know, when it's red, you don't want to buy, because normally when it's red, the stock's going to be coming down because people look at it as too expensive. But this never went into the other area. Remember, there was green down there. Sorry. So anyway, if we were to wait for a certain, let's say we use the MACD, because all these areas just look like, it just looks crazy. Like, what the heck is this? So if I were to go by the MACD, right here we had a crossover. So if we take this and go straight up, I would have bought in at 24.67, and let's say I only use the MACD, right? And I waited for the MACD to have a good crossover to sell. Well, then we move over here, and right here we see the crossover. Right here. So $26.46 is where I would have got out at. And our first crossover is at $20. So $20 to $26, is a very big, it's a pretty big jump. I would like to make, give you $20. What is this? $20 on Thursday. And then by the 2 weeks later, you gave me back $26. So what is Playdemic stock? I don't know if Playdemic is a publicly traded company. I know they are owned by Warner Brothers, so I would think that would just be WB, but maybe I'm wrong. Yeah, I don't think it is WB stock ticker. Is it Warner? I don't think I spelled that right. Warner Brothers. I never have to spell these. I know it's an easy word to spell, but W-A-R-N-E-R? Oops. Brothers. I see Time Warner. I don't see Warner Brothers, though. Let's see if PD comes up as Playdemic. No. PagerDuty. I don't think they have a... That'd be something we'd have to look into. All right. So anyway, what is this next one I'm looking at? CASA. CASA. My Casa, Su Casa. Okay. Again. You see the red line? Which way is it trending? It's trending up. That's a good sign. Are we getting respect for this line? I would say we are getting respect. Even though it does dip below it, it also stays very close. It's not sporadic and going everywhere. So I saw this trend line going up. It was just $3.50 not long ago. What made me decide to put this on my list? Well, like I just said, we got a nice incline here. I'm kind of liking that the price is going up. We recently hit a high of 13.68. That doesn't mean we can't hit it again. So let's zoom in. And this is the day that I looked at it, which is yesterday. We had two small candles. We had just barely dipped under the red line. I thought we could get a bounce here. But if we look here, we got a big red candle, and the reason this candle's small is because this candle here is still ongoing. This candle's going to go till 4:30 p.m. So this candle could get longer, or it could turn around and get green and bounce back up, but CASA did not do what I was hoping it would do, so I am not going to invest in CASA. Another one is CLVR. Okay, this is, you can ignore these gray boxes. I made these yesterday trying to find out where the support and resistance lines are. What is support and resistance? Well, support is a floor. This is the floor. So this stock, if you look, hits the floor and bounces back up. It respects this area. And this is the ceiling. Yes, the stock did pound through the ceiling, but it came back down. As you can see, it hit the ceiling here, it hit the ceiling here, here, and here. So that's why I drew the line here. If I would have made the ceiling up here where by these all-time highs, then we'd only have one hit and it wouldn't tell us much. So what I'm thinking is, if this stock is showing an upward momentum over the next day or two, I could buy in around 10 bucks or maybe even 8 bucks if it goes low enough, and then I can sell out at 14 because all it'll be doing is coming in low, and then I would be selling at this point, which would mean, I would miss all this, but there's no guarantee for this to happen. So let's see what happened between yesterday and today. Yesterday, it had more of a loss because this red candle covers up the green candle more so. But, it did show kind of a comeback. And then today, 2 red candles. So again, another stock that I'm not really looking at right now. Look at Dive. Sure, I'll look at Dive. Oops. It doesn't like Dive. Oh, took a dive. I'm an idiot. My bad. Okay, so, and apparently there is no dive. All right, so I'm a goofball. CRNX. Wow, RJ, why would you look at this one? Look at this. We got the stocks all over the bottom of this line, which signify a downtrend. We have a saggy red line. It does not look very healthy here. And just altogether, this just looks like a big mess. Well, what I was hoping for was the trend from this point on, which covers about a week past New Year's till today. And if we just go by that timeline, it is starting to respect this line. So yesterday, I hopped in, and we had a big red candle, but you see that here's the red line. The red line is the 180-day line that we expect it to respect. And it's coming down, and as you can see today, it doesn't matter that the wick went past it because it didn't close below this. We don't want the body of the candle to close below this. So I'm going to probably want a little bit more confirmation. I'm going to circle this. This one looks like one I might be willing to take a position on. So this is CRNX. I'm going to circle it. And if we get another green candle here, I'm going to assume that this is going to bounce. If we get, because this candle here that we see, this little red one, it could turn green because it started here at 1626. It went up as high as 1629 and it fell as low as 1617, but this candle's not going to close till 4:30 p.m. today. So it could go up. Now, what am I hoping for? Well, look, we got really close to that line. If we could bounce off that line and possibly make a purchase around 16, so we got $16 here. The line is starting to swing up. So if we can get a higher high than what we have here, that's $17. And we're getting into smaller margins. $17.33 from $16. I mean, if you think about it, that's a decent return. You're not going to get these types of returns from a bank account. You're not going to get these returns from a CD or anything like that. But anyway, we're hoping for higher highs and lower lows. This is kind of an odd example, but it looks like there is a possibility. This one, it just isn't as healthy long-term of a stock as the previous stocks that I've shown you up to this point. All right. Yeah. What is that? Crinetics Pharmaceuticals. I mean, some, they have problems too. If they try to submit something for FDA approval and get declined for whatever reason, that can cause them to go down. Let's see, GBTC. So GBTC. Again, now this is basically one of those really healthy looking stocks that I mentioned before. Here is our red line, which we want to try to stay on top of. We got, here's a high, here's a low, here's a high. Well, we'll just call this a high. Here's a low. Now we're going to call this a low down here because this is still part of that low. So anyway, here we go. All right, we're going to call this right here. This is the lowest point, $10 per share. Got up to $12.29, then it went back down to 12. I'm sorry, to 23. Sorry, I can't talk. But anyway, you see when it stops moving up and starts moving down, this low is higher than this low. And that's what we want to see. And this high over here is higher than this high over here. That's the sign of a healthy stock. Now, here, this high is still higher than these other highs. So it's no longer making higher highs and higher lows, but what it is doing is it's respecting an upward trend here. And what do we see this blue line all the way over to the right doing? It's getting really close to that red line. So what I want to do is I want that line to bounce. And it could bounce today, it could bounce tomorrow, it could bounce next week, or it might not bounce at all. It might continue and crash down to $10 again for all we know. So let's see what I saw yesterday and what we see today. Yesterday, it was a down day, which was fine because here's that red line we're watching out for. And then in the after hours trading, it went up quite a bit. But then today, it's had a down day. It actually closed below the red line. And we're having a bit of a comeback here, but that is so razor thin. This could go either way. I'm not excited about what I see here. Yes, I do, but I'm kind of new at it. Is it Poithfinder? I hope I'm saying your name right. Jim Bob, are those two stocks that I already looked up or two stocks you want me to look up? CBIS? Let's look up CBIS. I'm down with that. CBIS. Oh, cannabis stocks. Okay. Well, Jim Bob, if we take a look here, this looks an awful lot of what we were just looking at. No, it's not the same stock, just kind of the same pattern, right? Okay, so anyway, what direction is this red line moving in? It's moving up. That's an awesome thing. The line was at $11.90, and now the line is at $46. So that's quite a big swing. And what else do we have? We have higher highs, higher lows, because here's the low. Here's the lowest point, so high. It didn't drop all the way back down to here. If it went up to here and then came back down and dropped here, that would be a different pattern. That would be like, you would just want to buy on that upswing and then sell it before it went back down. But it wouldn't go all the way back down because the stock was getting stronger. Then from this higher low, look, it goes up even higher. We went up to $53. This time we only went up to $48, not including the candles, just going off the SMA as kind of an average. But then, just like the stock I just looked at, it failed to make higher highs and higher lows. So what do we call this here? This is a support and resistance. So what I'm going to do is I'm going to draw a trend line and show you exactly what I'm talking about. So remember what I said earlier. This is a lot of information. I'm sorry, guys. That one red line there. And these are areas. Support and resistance don't respect a paper-thin line. That's why I made triangles on the one. Well, not triangles. Rectangles on that one. Trying to get this line as straight as possible. Not bad. There we go. Okay, so there's a couple things that this tells us. One thing is, you see it stopped right here. So at this point, instead of this being a floor, it was actually a ceiling. It did go through the ceiling, but we're looking at the blue line, and then it came back down again. Then this time it went to the ceiling and busted through it and created a new ceiling. And then what was the ceiling here? Look, the stock went down, but it bounced. It hit what used to be the ceiling is now the floor. And now it's respecting the ceiling and floor area. So when you're looking to buy in an area that has support and resistance like this, so you don't know this exists until after this first pattern, right? Here is the floor, here is the ceiling. Generally, you want about 2 or 3 of these, but because we're looking at a live stock right here, it bounced down to the floor again. I would want to buy here because I would expect it to go back up and hit the ceiling again. And it almost did a couple times. So we would have bought in at about $44 per share, and we would have sold out at, let's go a little bit below that line because we'd want to give it a little bit of fluctuation to see if it could hit the line again or go through it. And we would have sold out at $48.42. So $43 to $48 in what? In 1 week? That's a good return. And if you got enough money to invest, you know, and you buy a few shares of it, you could make money off of this pattern. As we see right here at the very end, look, it's coming down for that bounce again. So it's going to bounce off of the, we don't know for sure. That's why we wait for something called confirmation. But we're expecting it to go down to this red line that I drew. You could barely see it at the bottom here. And then you buy low and you sell high. And you buy low and you sell high. If all stocks just went up and down an equal amount, you know how easy it would be to make money on stocks? You buy here, you sell here. You buy here, you sell here. So CBIS is an attractive stock. You bought in at 6 cents a share? Jeez. Let's see, what was the other stock ticker that you mentioned? CNBX. Okay, CNBX. Okay, this one is a very interesting one. We came in below. We came in downtrending. This red line is kind of going straight, but you can see that it's kind of dipping down too. But here we broke through. Right here we crossed through to the plus side. And we had a good run. If you would have bought in right here where it crossed over from being below the 180-day line to being above it, which was early to mid-November, and you held on to this stock to its highest point, this is only a 60-cent stock. Any stock under $5 is a scary stock to buy, because what these are called, a lot of times people will set up something called a pump and dump. If you're not familiar with what a pump and dump is, a pump and dump is basically you get some people that have a decent following in, like, say, chat rooms, and they get newer people. They say, hey, you know, I think this, and I'm not saying this is a pump and dump. I'm just saying this is the price range for pump and dump. So what they do is they get a whole bunch of people that are following, you know, maybe you got 100,000 followers, whatever. It's not unheard of. Look how big PewDiePie and people like that are. You don't even have to go that big, but you get a whole bunch of people to invest a whole bunch of money into a stock that you buy a lot in yourself, with the intention of, once it hits a certain price, once you feel you got it going as high as you possibly can, you yank out the carpet from all these people. So you put, like, I don't know, you might buy 1,000 shares of this or 10,000 shares, depending on how big you are. If there's not very much volume in this stock, then 1,000 shares, you're going to make the movement. You're going to make a big candle on your own. And people could be like, oh, wow, he's right. Look, it's uptrending. So then everyone's going to start buying in. And then the guy with that $1,000 share, or $1,000 in shares of this, doubles, triples, quadruples his money, and then he pulls all his money out. And everyone who he told to buy this stock is stuck with their money in there, and the stock just bottoms out like crazy. That is a pump and dump. But this, I'm not saying this is a pump and dump. I see no evidence of a pump and dump. So if you would have bought in here at 18 cents, you could have sold out as high as 60 cents. And that's one heck of a return. That's 300% profit. You know what, Dottie? It's my medication. You got to respect the floor and the ceiling. Without the floor, you'd fall. So anyway, yes, we did have an uptrend here. It didn't last very long, but if you would have taken advantage right here as it crossed over, you would have been in great shape. And even the small gains are huge, because look at this right here. 19 cents where it crossed over. Let's say you held on until it crossed over again. That's 32 cents. That's like... I hate math. You increased your money. Actually, I could draw a trend line, and it'll tell me how much money it is exactly. I hate trying to figure this stuff out on the fly. So from there to there, you made a 73% profit. And that 73% profit doesn't even include getting out here, because the smart money would have bought in here, rode this. There's always going to be volatility, so don't sell when it goes down. The market always moves in ebbs and flows. I would have gotten here, and I would have waited for this to come down some. Maybe I would wait to about here to sell, or maybe I would see this bounce and then notice it didn't get as high as this bounce up here, and then be like, you know what, right here is a good time to sell. But that would be a 45 cent from 19 cents to 45 cents is over $200 in profit, or 200% in profit. But I mean, if anyone has any questions, let me know. I'm not a professional at this, but I've been spending, when I'm not streaming Golf Clash that whole week, I've been watching a whole lot about this. And I do. James Gentry, is this, did my title not say the stocks? I hope it did. This has nothing to do with Golf Clash. The title of the video should be swing stocks. If it doesn't, then my bad. I could have sworn I typed it in, but maybe YouTube screwed something up. XLC. Let's see. XLC. And you said look at it for a year? Yeah, okay. So once again, you see how the blue line crosses over the red line. So there's no guarantees, though. There's many times it crosses over the red line, then boom, it goes back under. But if you would have bought in right at this crossover, which is a pretty popular spot for it to cross over, you would have bought in at $50.67. And if you were to sell it right now, you'd sell it for $75.84. That's 25, 30, about a 33% profit, I believe. So this is a nice looking stock. This is something that if you got in on the bottom floor, you could be in great shape. However, if we look at it, let's look at it at 3 years. Okay, so if we look at it at 3 years, we don't have the other line, so you can't really do it. But yeah, the 1 year chart shows excellent promise. And now you see this candle right here, that look how close that green candle got to the red line. Some people might have got out right here. They might have been like, you know what, we're getting too close to the line. I'm cutting out here and taking my profits. And the profits are only at 52. They would have missed out on $20 more in profit per share. So this is an excellent, very healthy stock if you would have got in at the time that the getting was good. Now, this could continue for 5 years into the future, continue just going up, up, up in this red line. We don't know what the future holds, but I will tell you, even right here, getting in at $58. No, not 58. The last time it was under the line, this crossover here would be $60.44. You would have turned $60, let's just call it 60 to make it easy. You would have turned $60 into $75. One share. What if you bought 20 shares? Depending on how much you have to invest. Now, Jeffrey Bowman brings up a great point. There are capital gains taxes, and I hear they're as high as 50%. But the good news is you only get capital gains taxes on your profits. And if you look up on YouTube, there are ways, like if you're doing this, especially like swing trading where it's more like a job instead of just, oh, okay, thank you, Radu. I wasn't certain if the title stuck or not. I thought maybe it screwed up. But you can do this as, you can also set this up as a business. And the cool thing about setting it up as a business is that you'll be paying business taxes, which are much lower than capital gains taxes. But you need to talk to a CPA. You need to talk to some, to just make sure everything's above board with that. I don't know enough about that, but again, like I said, I'm only investing $100 at this point. So if they tax me 50% on my $6 gain, because yeah, I made 6%, I'll send the government the $3. However, this is great. Let's see. Okay, so yeah, I mean, anything you do, you're going to have taxes. LLC, exactly, Jeffrey. What did I look up prior to this? Let's look at another stock here real quick. This is kind of taking a little longer than I thought it would. And I'm just kind of like, I have so much information I'm just spewing out. This would be better in like a video format so I could stay on one topic. Why did I choose to look at this stock? Well, you see from November again, from November to previous, we have a nice uptrend. We also have respect for this SMA, 180-day line. We only went under it twice. And the last time we actually really went under it, meaning not including these little candlesticks here, was way back in late October, early November. So anyway, I see that, and again, the bigger the gap between the red line and where the stocks are, the stronger it is. So we see it, here it come down. It came down for a bounce. Right here, you're thinking, oh no, it's going to crash and keep going, which it could have, but it respected the floor. Now it looks like we're about to test that floor again, right over here. And yesterday, I saw this red candle. I was hoping to see a green candle today. And I do see a green candle, and this green candle is bigger than this red candle, which means today is still a green day. And GFL is one I'm going to circle because this looks like a healthy stock to me. This looks like one that could bounce. Now, what do we stand to make, and how long are we going to be in this trade? Okay, well, let's look at past bounces. So if we go from this bounce over here to this bounce over here, down at the bottom here. So this is February 15th to the next bounce, which will probably be around the very end of April. But we don't want to sell it at the bounce, right? We don't want to sell it at its lowest point. We want to buy it at its lowest point. So that's why I was waiting to see how close to the red line it was going to get. But we also need to make sure that it doesn't go below the red line, because it could start downtrending at any time, much like it did over here, and it could have went much lower. So I need confirmation. I need a few green candlesticks following this, showing that we definitely have an uptrend pattern. So I'm not going to capture every profit. Nobody buys in here and sells at the very tippity top of a wick, because you would have to be an inside trader or something like that. I don't know. What stock did I buy? I opened a Robinhood account yesterday. I'm not sure. I haven't bought any today that, but I have circled a couple. The stocks that I'm currently holding, let me open this real quick, is Lion Gates Films B. But just because I'm holding these stocks, it doesn't mean they're winners. I'm waiting to see if they're going to be winners. And actually, I would pay more attention to what I'm looking at today, because what I'm looking at today are primed to either take off or let me down. And if they let me down, you sell them a day or two later, or maybe even a week later. You give them a little bit of time depending on how much they go down. But if they go up, then you're in good shape, and you just ride it until you see a downtrend. So this looks promising. The GFL, I have it circled. I'm going to wait another day or two to see if this trend does continue in an upward trend. And if it does, I'm going to go ahead and place an order for GFL. And again, I'll ride it until it hits the ceiling. I wonder if this next one is GoPro. It's G Pro. Nah, I don't think it's GoPro. But you guys keep seeing there's a trend to my trends. All these are heading up in the right direction. So, again, why do we wait for confirmation? Good day, Joe Golf. Joe, please, if you have any questions, if I know the answer, I will answer it. If I don't know the answer, I'll be completely honest with you. So, because I am on disability, I don't have a job. I have so much time to go through so many YouTube videos, look at so many books, whatever, and just I could amass so much knowledge in a much shorter period of time than a lot of people who have 9-to-5 jobs, and you get home from work and you don't want to beat yourself up with learning everything here. But please, Joe Golf, or anyone else in the chat, if you have any questions, if it's something, I did not buy Coinbase, but I did buy Dogecoin, if that's what you're talking about. I kind of went a little overboard and bought 100 shares of it, but that's only like $40 total. But I mean, hey, if it does hit $1 today, like they said. Joe Bob. Did I miss something from Joe Bob? Then I stand to almost triple my money. Oh, my pleasure, Joe Golf. I'm looking for Joe Bob. I hope I didn't miss anything. Are you talking about Jim Bob? Oh, Bob, Job, Bob. Oh, God, why do my eyes see? Okay, so anyway, yes, G Pro. If you would have been waiting for a bounce, let's say this was respecting the line, right? Right here, it goes under the line. So if you were to buy, this is why you got to wait for confirmation. You could have been like, ooh, we're going to get a bounce right here and it's going to go back up. So you decide to place an order here and then the stock continues going down. You're like, oh, but look, now it's starting to go back up again. It's a risk because then it went all the way down to its all-time low at $3.47. And you would have been holding, now let's say that you did buy here and you're like, well, right here, I'm going to hold on. This was back in the late summer of last year. You would have had to hold this stock till October of, so what is that? That's 2.5 months just to make your money back. So it really wasn't doing, and there's no guarantee that this uptrend would have came. This is why we don't go, okay, it hit the red line, now I'm going to buy. Because not every time it hits the red line is it going to go into an uptrend. So that's why you see me saying I'm waiting for confirmation. So why didn't I just buy this stock yesterday? It hit the red line. Well, that's because I don't know if it's going to bounce up or if it's going to pull one of these. So what do we see from the past? All right, take care, Jeffrey. Oh, you're fine, Dottie. I thought I saw something. I thought you were telling me Jim Bob said something. Hey, Ola. Jesse, what's up, man? I can make you $6 with a $100 investment. I'm not that good. So anyway, what trend do we have? It's awesome to see you, Jesse. How you been? What trend are we seeing? Okay, well, starting in early October, we are above the 180-day SMA line, and we are respecting that SMA line with ebbs and flows all the way up until February of this year, where we briefly dipped under it and for about a month, and now we're back on top. And if you would have bought in right here at this crossover at $8 and you would have sold out right when it hit its high, well, created a new high, I should say, at 1838, you don't look at the dollars, you look at the percentage. Nobody cares about making $5. But what is the percentage if you go from, like, let's just call this $9 to $14? Imagine if you buy X amount of shares of this stock. So right now, I don't know if this stock over here, if the current trading price and everything is going to go back below this line and pull one of these or pull one of these, or if it's going to bounce and create a new high. So G Pro is one that I'm going to circle and watch. And as you, okay, so we went over 1, 2, 3, 4, 5, 6, 7, 8, 9 stocks so far. I've only circled 3. So there's 3 stocks that really have my attention. Now, of these 3 stocks that really have my attention, I'm still going to cross out probably another 2/3 of them, but it'll be worth it to make the profit on the one. And that's if I'm smart. If I don't, you got to do your work. You can't just say, if it was as easy as looking at indicators and charts, everyone would be a billionaire. All right, Grow is actually the next one that I have written down. And again, here we go. We have the red 180-day simple moving average line that is trending in an upward position. And we have a lot of respect for this line, including this part here where it went under. It never went over by much or under by much. And we call this an area, not a line. Stocks aren't going to respect a paper thin line, but they'll respect an area. So what do I mean exactly by an area? Well, I don't only have to draw lines. I can draw triangles. Why do I keep calling rectangles triangles? You see that line I just drew? It respected that area. And now it keeps coming up and it bounced off of this red line, which is the 180-day line. Now you might be like, well, wait a minute. Why is the red line higher there than it is here? It's because it's a simple moving average. This is the way the stock is trending. And that's why this looks like a stock that I might want to take a position in, especially if I would have known to buy in here and sell way up here. I'm hoping for another bounce. It happened once. If it happened twice, that's even better confirmation. If it happened 3 times, that's great confirmation. So, but what am I doing? I'm waiting for confirmation. Is this one that I'm going to circle? Well, yesterday when I looked at it, it was down a little bit, but it made kind of a comeback. Today, it went down again and actually crossed below the red line, which, like I said, is an area, but it's not a good sign for me. I'm not going to circle it, but I'm not going to abandon it either. So, let's see. A couple more stocks here to go. HCKT. Not plus. Enter. There we go. All right. This is more of a sloppier one, but ever since, what is this, February? No, we can go back. November, it's respecting the 180-day line. Actually, this is one that I have basically for the future. It's going to take a few more days for this to come down closer to the line where I feel that it'll be a bounce. So I saw this. I'm like, okay, we're respecting the line, but it's kind of like right here, but in the future. Do I want to buy right here? No, I'd rather buy in down here and have it go up. But it's definitely one that's on my radar, and it's staying on my radar. So moving to the next one, we have INTT. And this one's a lot closer. See how this is getting really close to the red line? What did I say earlier? We want to buy low and we want to sell high. The prime example of this is buying in at $4.03 and selling it at $12.61. So what am I doing? Well, I got to the party late, like 90% of the people, 95% of the people. So what I want to do is I want to see a stock that's respecting this red line. And again, the further you get away from that red line, the healthier the stock is. Well, now it's coming in closer to the red line, so it's not quite as healthy as an uptrend. However, if we can get, like, we don't have to touch the line, but if I can get a few green candles in a row, maybe 2 or 3 days out from now, if I start seeing an uptrend, I'll invest in this company. I'm going to circle this company because this is another one that I am waiting for the bounce up. If it doesn't bounce up and we keep getting red candles in the wrong direction, I'll simply cross it off. Do you primarily use this trend analysis, or do you also consider analysis ratings, i.e. buy, sell, hold? Well, Joe Golf, I like to look at the buy, sell, holds when I'm unsure, but that's not you should never buy something that you feel unsure of. But then again, you should never be 100% confident in your picks either. What you need to do is be picky. So if you're going to, what I mean by being picky is, what I like to do is I like to set up 3 or 4 indicators to my, for myself to say, is this a healthy stock that is going to most likely do what I expect it to do? And what I'm showing you guys today, on the screen anyway, even though I'm not really talking about it, is number 1, I want to be above or very close to, if I am below, the red line. That is one indicator of an uptrend. You see that going up? That's an indicator of an uptrend. If any stock that has that, this 180-day simple moving average has my attention. What's another one that I actually haven't covered yet? Well, this 9-day, is it 9-day? Yeah, this 9-day moving average for shorter term trends, you see how a couple of the candles are under it, then a couple of the candles are over it, then a couple of the candles are under it again. When the candles are above the blue line, that is what we call a short term trend as well. So if you can get the candles both above the red and above the blue, like if I would have bought in, let's say I bought in on this candle right here. That is $10.57, right? And then the candle stays above that line until right here. So I would have sold out. We don't sell out on wicks. We sell out on where it closes. So I would have sold out right here for about $11.55. So I would have went from $10 to $11.55. That would be a 15% return in just, what is this, 1 week. This is Friday. This is Tuesday. So a little over a week. So that's only 2 indicators. These candles have meaning. What do I mean by that? Well, you see this green candle here? Let me zoom in on it. Okay, this candle here is called a hammer. A hammer candle is what is known as a bullish candle. And a bullish candle means that the buyers are in control, not the sellers. So what happened was the stock opened at the bottom of this green body, and it looked like it was going to be a bad day. The sellers got this to go all the way down to the bottom of the wick. And the buyers said, no, we're not doing that. And they pushed it all the way up to this top wick. And then the sellers came back in a little bit, but were only able to get it to this point. So despite this being a short candle, this long wick on the bottom tells us that it's more likely that we're going to have several green candles or an uptrend following, which, as you can see, we do. We got one red candle there, followed by yet another hammer. Now, what we have over here, though, is the exact opposite of a hammer. This is called a shooting star. So here, the stock opened at the bottom of this green candle, and it looked like it was going to do really well. The buyers pushed it all the way up to the tippy top of this wick, but then the sellers took control and drove it down to this, as James loves to hear, nipple, and then pushed it right back up just a little bit to close for a little bit of a gain when they were hoping for a big gain. Now let's see if this pattern doesn't always work. So this is why we use more indicators than just the shape of the candle, than just these trend lines. Another thing we have is the MACD index. The MACD index, when they're red like this, is showing a downtrend. When the white line crosses the red line, then it's showing an uptrend. Notice the cross of the line here, and then we have red, 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 red while the red's on top, but then green, 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 green when the white's on top. So that's also telling us to buy. And then again, we have the RSI indicator, which is actually like right here, it's red. Where it's red, that means that if you buy in here, you're buying in at what is being valuated as, you're basically overpaying. You want to buy lower on the RSI. But if you go around looking for stocks that are super low on RSI, you're going to see a whole bunch of sick stocks that don't move, that lose money. So you can't just go by one indicator. So I hope that helped you in some way. All right, so next, let's see. We got 1, 2, 3, 4, 5 more stocks to go. IPI is the next one that I looked at. Here's our upward trend. One thing that worries me is we broke through the line, but again, we need to remember the line is more of an area. However, we continued our downward trend. This huge candle wick. The buyers are fighting back, but this is not one that I'm going to circle. It looks like we're going to break the trend and go into a downtrend. So what I'm expecting this stock to do, unfortunately, based off of very limited information, is instead of bouncing back up off of this line, I think it's going to create a new trend coming downward. AAL is the next one I liked yesterday. Wanted to see if... Okay, again, here we go. We have... Oh, no, it's the same one. AAL. Okay. Why did I write this one down? We do have an uptrend, but we're clearly switching from an uptrend to a downtrend. Look at all these red candles. AAL, I have no idea why I wrote this down. That's funny too, because I actually have it above the 180-day and it's not. So my eyes must have been getting tired. Now this next one's interesting. This one, AAP. You're going to see several red lines. It's this wavy line that is the actual SMA. What I did is I drew out a floor, which is support, and a ceiling. Now, I'm not buying this anytime soon necessarily, but what happened? Well, so far, here's our ceiling. Look, we busted through the ceiling. Now, we came back down to earth a little bit. Do I want to buy this stock up here? Maybe. This is Advanced Auto Parts. Maybe it'll continue to go up much like it did. Like I said, stocks can go up and down at any point in time. But what I'm doing, the reason why I'm afraid to buy in here is because if we look down here at the RSI indicator, it was very close just yesterday, as a matter of fact. It was overpriced. So, yes, it could make this the new floor, and then we could have a new ceiling. But in my opinion, it's more likely that it's going to bounce down either off of this 180-day SMA line, or it could go even further down and hit the floor and then bounce up. What do we want to do? We want to buy low, sell high. So if we would have bought right here at 153.75, we could sell today for 192.57. That's a nice big profit. That's what, 25% profit? 150 to, yeah, that's 25% profit, I believe. Somewhere around there, 20% profit. And again, you never want to put all your money in one stock. You want to put no more than 10% per per stock. AAL is American Airlines. Yeah, I don't know though why I had that on there, because it's like, I don't care if it's American Airlines or if it's you know, Bob's Food and Beverage. I'm looking for the trends. I'm looking for, okay, this stock is showing me that it continually makes higher highs and higher lows. That's when I want to really get into a stock. So yes, this place is called Advanced Auto Parts. We have one right up the street. I know what it is. I know it's a rather large company. And I'm only here because I like the pattern, not because I like the name of the company. Can you recommend any resources, books, online content to try and learn this stuff? Joe Golf, Zip Trader is my favorite. He does not really go into like he makes 8-minute videos. He doesn't make 4-hour videos to teach you something he could have, taught you in a small period of time like that. So Zip Trader is one. I do not recommend that you buy their classes, because everything I've learned on my own, through YouTube or whatever, was 100% free. Just, God, I keep getting tongue-tied. I'm sorry. But anyway, yeah, Zip Trader has been good. Another one, if you got a pen and paper, is Humbled Trader. Humbled Trader will show you how to set this up, and, how everything, what the MACD means, because I'm giving you guys really, really basic information. The RSI, things like that. Those are two people I really like. Rainer, I can't remember his last name, like Rainer Tao or something like that, is another good person. I think that's probably, God, what is, there's another guy that I like, it's something, Trader 212. It's got 212 in the back. Trading 212 or something's another good one. There's a lot of good ones out there. But my number one go-to guy is Zip Trader. I completely trust him, and I've made money off of his, off of what he was talking about. Okay, 2 left. ABB. Oops, it wasn't highlighted. ABB. Second last one. Okay, here's another one. I drew these red lines. So the only red line that really is natural here is this is the 180-day, the wavy one, not the straight ones. Okay, this red line goes below my red line. Does that mean anything? No. Because what I'm doing is I'm drawing a floor. The candle on the floor, James, with the hammer, and a shooting star. No. But anyway, you'll notice bounce, respect. Here's a bounce up here. So it's also respecting the ceiling. Here's a bounce on the ceiling. Here's a bounce on the ceiling. Here's a bounce on the floor. And what direction is the floor and ceiling? We're looking like Lionel Richie in his music video Dancing on the Ceiling, because it's an uphill floor and ceiling. It's not flat. And that's a good thing, because that means it's making higher highs and lower lows. So I want to get in on this action. Unfortunately, I will not be buying ABB anytime soon, because right now it's at the ceiling. But I'm going to wait for it to get back down to the floor, which will probably be right around this area here sometime next week, maybe this week, maybe by Friday, actually. It may be at the floor, and then this is going to continue to go up. So, like right here, the ceiling was at $30.46. Right here, the ceiling is at $33.96, $34 basically. Right here, the ceiling is at $27. So see, the ceiling's rising and the floor's rising. So I want to get in at the lowest price. Optimally, it would have been awesome to get in right here at $30.20 and ride it all the way up to the $34 mark and then sell. And then that's what you would do. That's what swing traders do. You buy here, you sell as close to the ceiling as possible. You buy as close to the floor as possible, you sell as close to the ceiling as possible. It's just a repetitive step. Day traders is even more. You know, day traders generally only trade 1, 2, 3 stocks in a day because they have to keep their eyes on it 24/7. You know, well, not 24/7, but during the actual trading hours. So what would it be? It would actually be, what, 7.5, 5? Not quite 24/7. So ABB, for those of you guys that are thinking about investing, this is a super healthy looking stock. I want the price to come down a little bit because I want to buy it at a good price. And if we do get anywhere near the floor again, I'm hoping for another bounce. This is an example of something that I am 100% interested in. But do I buy it right now? Well, let's look at the MACD indicator. The MACD indicator shows a crossover. The white is now under the red. That tells me that it's getting weak. Also, you don't even have to look at the white and the red. You could look at the red and the green. The green is good. The red is bad. So with the red here, we want for this red to stop. And then when it starts turning green again, maybe 1 or 2 green spots, we might be like, okay, that's one indicator that says, yes, go ahead and buy. And then, you know, we got floors, ceilings, everything else. So no breakfast. And we're back. I don't know why it cut out. And what the heck is all that red weirdness at the bottom of the... That is weird. Okay. Hopefully that looks better. No, no breakfast. I did make 6% return over the past few months. 6 whole %. But, I mean, if I put the money in a bank account, I probably wouldn't have made 1% in a year. So I'm feeling pretty good about that. All right, last stock. ABC. Easy as 1, 2, 3. Come on. Highlight. ABC. Okay. This stock looks like a mess. But it does have a proper floor and ceiling. This shows everything that I would want you guys to see. Once again, why don't we just buy every time the blue line and the red line meet because it's going to bounce up? Well, it's not always going to bounce up. Sometimes it's going to continue to go down, and it's not always going to come back up. Remember, I'm looking at healthy stocks that I handpicked. I went through my list over here, and I whittled down hundreds of stocks to a list of about 17, and we're on the last one of it. There were many stocks that were 1,000 times uglier than this. This is actually good. But yes, you don't just see, like, I don't know how far back we could go before this, but if, you know, we don't know what this trend was doing, but we would assume that it would respect the line and bounce back up. And that didn't happen. That is why we wait for confirmation. And confirmation was had here. What is confirmation? Did we get confirmation on this uptrend? Okay, so here's that red line. Is this? No, this is my trend line, isn't it? I can't tell. No, that's not my trend line. Okay, so yeah, let's look at, now this was a really quick, sharp upturn. So this is the trend line. Okay, so this is the line we want to pay attention to. We're under. Okay, here's a hammer candle, which is a strong bull candle. And what happens after that? We get a little red candle, but it's not one candle that we're going by. Boom, 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 boom. It shot up. So what do we want to do here? We want to buy low. And then when it got to this point, we want to sell high. And then right. Okay, this is called an all-encompassing candle. And what that basically means is this candle is much bigger than the candle on the left side. Another sign of weakness is the fact that this is a shooting star. A shooting star is also an upside down hammer. A regular hammer, a good sign that things are coming good. An upside down hammer, whether it's green or red, is a bad sign, showing that, it's also known as a shooting star, that the stock is about to drop. So anyway, the stock was just kind of in like a bit of a chaotic flux here. So you wouldn't have known to buy in here and sell here because, it was just going every which way. However, this was our first ceiling hit. This was our second ceiling hit. Right now we're on our third ceiling hit. And we're waiting for our third floor hit. Here's a floor hit. Here's a floor hit. I want to buy at the floor hit. I don't want to buy at the ceiling hit because we don't know if it's going to bust up, and it showed us in the past that it's respected the ceiling. So in all likelihood, the price is going to come down. And sure enough, it's not moving very fast. We had a nice strong candle in the beginning of the day, and now the sellers are starting to take over. I want to wait for the candles to get near the floor, and then I'll purchase, and then I'll hopefully ride it up. So let's see. No breakfast. Yeah, I figured I'd share it. I didn't know I was going to babble as much as I did. It didn't turn out the way I wanted it to. Shelby said, I would imagine you would want to look into the company to see what they do. Make well, correct? Or do you just go by the graph? 95% of the time, I just go by the graph. And the reason why, Shelby, is because no breakfast, I don't know what their stock ticker is. The reason is because it is swing trading. I am not long-term investing. If I were to long-term invest, if I were to say, okay, I am going to put 5 or 10% of every check I get into a company, I'm going to want to know the information that you just mentioned. However, as a swing trader, I'm going to be getting in and out of trades in a very short period of time, anywhere from one day, which if I do one day, it's just because the stock absolutely tanked. It's very, very rare for me to hold it for only one day, all the way up to maybe even a month. But in the grand scheme of things, when you're investing for years or decades, or maybe even 6 months is considered investing. And that's when I would want to know more about the company. Another time I'd want to know a little bit more about the company is with penny stocks. And a penny stock is considered anything from 1 cent all the way up to $5, just because a lot of times there's, you don't know what's going to happen. They're very volatile. There's it could be in the middle of an uptrend and it could just go down to nothing. Kavak says, so basically you're saying to buy at low elevation percent. Yes, we want to buy at negative 20% elevation, and we want to sell at plus 50. Right? I think so. But no, in all seriousness, it's always buy low, sell high. Why is it buy low, sell high? Well, because if you buy high, chances are you're going to sell low. It's like an opposite game. There's very few times that you get an actual breakout. Let's look at stocks you guys are familiar with. I believe in the company Telsa. Is it TLSA, I think? No, Telsa. What is Telsa's? Whatever. Let's look at IBM, which I haven't seen IBM in forever. Okay, so IBM, they're big with businesses. They do a lot of, good things. They make a good product. However, I'm looking to capitalize on trends and swings. Okay, TSLA. Thanks, Joe Golf. What was I spelling? Anyway, I'll look at Tulsa next. If you look at this, there's no uptrend. There's a little bit of an uptrend that started at the beginning of last month, which might be intriguing, but for me, I like to see a little more proof. Because as you can see, there was also a downtrend from this point to this point. Then there was an uptrend from this point to this point. Then there was a downtrend from this point to this point. Now, long term, do I want to hold IBM? Yeah, but IBM's been around for a lot longer than 3 years. So this is the 3-year chart. It's actually gone down. However, if you've been investing in IBM since the beginning of IBM, and you had a lot of shares, you're probably a millionaire. So, there's just so many different charts. I could look at this chart here. Every candle represented in this chart is 1 minute. 1 minute. These are what day traders look at. 1 minute is one candle. And then on the extreme other side, this candle is 3 weeks. So you could look at 1 minute or 3 weeks, and I'm somewhere in the middle at one candle equals about 4 hours. So this candle's 4 hours, this candle's 4 hours, this candle's 4 hours. So yeah, Tulsa does not have that pattern of higher highs or higher lows. You can say, hey, look, you could buy in at 105 and you can sell at 138. But you had no way of knowing it was going to bottom out at 105 because it's an erratic, there's no patterns really to help you out. All right, so you guys were spelling TSLA. That's what I was trying to see. TSLA. I should know that. There we go. Tulsa. All right. Well, Tulsa had a wonderful upswing. Look at that strong trend. But the strong trend ended. See? This is a prime example. Uptrend. Pretty much respecting the line. So someone who wanted to get in on Tulsa's like, ooh, look at this. Maybe they noticed it right here. They're like, ooh, I'm waiting for a bounce. And they waited and they waited. It got up to, $900 a share. They're like, okay, here's my bounce. Right here. It's going to, I'm going to hit it here and it's going to continue the trend up. There's no guarantees. It's like this line wasn't here. There was no respect for it whatsoever. Oh, I keep pronouncing it wrong. Thank you, James. Tesla, not Tulsa. Sorry. Tesla. I don't say it that often. I'll never own a Tesla. I'm poor. Angles Dan, what's up, man? Oh, everyone in the chat's yelling at me. You punks. Whatever, you know what I mean. I can't find Playdemic. I don't know what their stock ticker is. I looked earlier. So this would be a downtrend, and then we crossed back over again. Is this a great place to buy? Well, it could be. It could be a good place to buy. Maybe it'll bounce in the future here. However, it could do another one of these again. So Tesla's one that I don't want to get into at this moment. Now, would I have got into it over here somewhere? Yeah. I like that we tested the floor here. We tested the floor again. We tested the floor again. So right here, the third time we hit the floor would probably be a time I would want to buy. And then I'd be a little bummed out because I'd be like, ooh, I made some money. Oh, no, I gave it back. We went under the red line, but then it just skyrocketed. It's okay. This is why we don't get out of a trade the second we go below the red line. Because if we would have bought, what was the third one? 1, 2, 3. If we would have bought here and been like, oh, no, we went under the line and sold here, we would have missed out on all that. So you got to give yourself some room for error. That's why I was looking at stocks earlier that were within a range, you know. Now here, this is a big gap. This means that it's a very weak trend for buying. Definitely don't want to buy here. Is it a good deal? Is it cheap? Yes. 583 when you could have bought it at 900. Some people probably did buy here and made a lot of money because look, it went up. But at the time that it was here, you didn't know, I didn't know, Elon didn't know that it was going to go back up. It could have continued to go down and crashed. So that's where we're at. Telsa. You gonna unsubscribe from me? Telsa. No, I'm just playing. Anyway, thanks for hanging out with me. Yes, Tesla is volatile, but volatile is great when you're swing trading. If you get into a stock that has no volatility, then it's going to sit at one price for months and months and months, and you're not going to make anything. You're not going to lose anything. But I mean, there's no point in it. You want, like another one that's really good is AMD. AMD is mentioned an awful lot. And look at that. Look at that movement. There's so many spots where you can buy low and sell high. I don't particularly care for the trend, but you know what? Actually, this ain't a bad trend. Let me show you. If we ignore the line and we go by floors and ceilings, let me show you the true pattern. It's not respecting that pattern, but it's respecting another pattern. It's respecting this pattern right here. Look at that. It bounces off the floor. It looks like it's coming off the floor over here. Maybe not. It's bouncing off the floor here. It's bouncing off the floor here. It's bouncing off the floor here. So that's actually a really good spot. And then what you do, this isn't rocket science or anything. You try to find a spot where you have the most bounces. And in the short term, we want bounces on the floor and the ceiling. I think this is our best line, even though there's a lot of breaks in it. Okay, so what do we see here? Yeah, we do have some breakouts here. This is a big time breakout. But overall, the stock is respecting what we can do also. What you do when you get a lot of breakouts is you find an area like this. And we're going to draw another line here. So there's three stages. There's the floor, there's the ceiling, and when you're in a breakout, then the floor becomes the ceiling, and this is the new ceiling. So if you bought in here, we busted through the ceiling, you sell here. But if you sold here and waited for it to hit the floor again, you'd miss out on this. Boom, we hit the floor again, and we went above the ceiling again. But we're still very close to the ceiling. That's why it's there. Hit the floor again, hit the ceiling again. See, every time it hits this, well, not every time, but a lot of times that it hits the ceiling, it goes right back down to the floor. So it's really common sense. It hits the ceiling or goes a little bit below, above the ceiling. Wait for it to get to the floor again. Be patient. It didn't hit the floor here. Should you have bought here? Yes, absolutely. But not because of your analytics and knowing the market, but because of luck. You don't want to put your money up on luck. This right here is probably the best point to buy. Because if you bought here, you'd be able to cash out at the high of almost $100 a share. But there's no pattern showing here. So what you would have done if you would have bought here was expected it to come back down here and go back up. You'd be giving up profit. Now, once we got up here, we made a new ceiling, and then we bounced off the floor and went through the floor. So you see all these opportunities. There's an opportunity here to buy low, sell high. There's an opportunity here to buy low, sell high. And these aren't small gains. These are very big gains. From here to here is 2 weeks, 14 days, and 6 hours. You would have made 19.22% profit alone in 2 weeks. And again, like I said, we don't go by money. We don't say, okay, well, it was at $72 and we got it to $87. No one cares about the money. I don't care if you have a $400 stock. I don't care if you got a 60-cent stock. You're making the same amount of money based off of percentages, because maybe you only have one share of AMD, but you have 50 shares of something that's a much smaller company. And believe me, each and every one of you guys would be opening a bank account today if the bank told you, open up a savings account and in 14 days we'll give you 20% interest. I mean, to me, it's just common sense, but there is homework to it. And if you don't do your homework, you're going to get burned. You're gonna buy in here thinking that this is going to bounce back up again, and you're just going to get burned. So, right, you're 100% right, No Breakfast. That's why, don't trust gurus. Don't trust people you see on YouTube showing their Ferraris and, from their mansions and stuff. You know what I learned about people like that? They were born with a silver spoon in their mouth, and this is what they wanted to get into. Do they know more about the stock market than I do? Yeah, because they've been doing it for many more years. But the true people, the true millionaires that make millions off of the stock market are not making YouTube videos. They're busy day trading. And you can be too. Maybe it'll be for you. Maybe you'll lose money. There's paper accounts. You can do paper trading. TT Games, which is Warner Brothers company, so it won't have a stock symbol. Okay, thanks, Engels Dan. I didn't know what TT was. TT Games, that's interesting. But yeah, Joe Golf and anyone else, I don't think I'm going to do a stream again on this anytime soon because I was all over the place. But I'd be more than happy to make videos explaining everything, so you're not just looking at charts that you might not understand. Right, well, that's exactly the point, No Breakfast. If you're making enough money in the stock market to drive around in a McLaren, then why on earth are you taking time out to make YouTube videos? However, you're also trying to sell classes. Well, you're already a millionaire. Why do you want to be a teacher? Go in the market and make your freaking money. You're not going to be like, oh, I charge $400. If you guys go looking on YouTube, you're going to see people trying to, there's people charging $1,000 for classes in the stock market. I like that, James. Never give money to someone telling you they will make you rich. True advice is to tell you how to invest. I am not telling you how to invest. I'm teaching you how to swing trade, and this was a very poor video. But I just wanted to test it out a little bit. Like I said, I went everywhere. It was just so discombobulated. But if you do want videos on this during the off weeks, I'll be more than happy to show you what I learned. And the advantage, the reason why you'd want to watch my videos is because I watched hundreds, maybe even close to 1,000 hours of YouTubers, and I weeded out the trash from the gems. So rather than you seeing 1,000 hours, to know what I know, I'll just share everything that I know, things that have made me money. And, if you like it, great. If you don't like it, I understand. Well, thank you, Joe Golf. I really appreciate the kind words. The more I do it, the better I'll become, to be able to make videos and such. And if you guys do want to help me out in any way, if you don't already have a, Nightbot is just hounding you guys. I'm sorry about that. I'll have to slow down the timer. But click on the joinrobinhood.com. You will get one free stock, and I will get one free stock. And that'll set you up for Robinhood, which is the easiest trading platform on the internet. I don't know. That's the one that I use, but I do all my analytics on this chart that you see on the computer, and then I just run over to Robinhood and execute the trade on that app. Well, there's a big difference, though, No Breakfast. Please don't look at me as saying Tommy or Neo or Fenzel or whoever makes Golf Clash guides is trying to rob you or anything like that, because they're not. They're putting hours and hours into, into the game, into the tournament notes, and they're charging you what, like $20 or something like that, and you can get your little digital gold medal, which I want so badly. But these people that are trying to sell you classes on the stock market are charging hundreds, if not thousands, for stuff that's available for free. So in no way, by me saying that, was I saying, hey guys, don't waste your money on Golf Clash guides. That's a totally different thing. Even if you have a whole bunch of expendable money, don't spend $1,500 on a class from a guy who's driving around in a McLaren because he was born with a silver spoon in his mouth. And while he knows more about the stock market than I do, the money just isn't going to work out. You'll never recoup that loss, because the stock market is all about gaining money, right? I learned all my information for free. So I have $100 in my account. I got it up to 107, and then I overbought that Dogecoin, which I'm still going to hold on to. I think I'm sitting at around $99 now because Dogecoin isn't doing what I thought it would, or what I hoped it would. But I'm going to hold on to Doge for a while. Now I'm back up to $100.75. But before that, I was at $107, which is a 7% return. And I haven't been doing this forever. I mean, No Breakfast, it depends. I didn't want you guys to think that I was talking trash on the people that spend a lot of time on those guides. I think that the people who sell classes to teach you how to do the stock market, most of them are snake oil salesmen. But anyway, I'd like to end this by saying, if you'd like to join my class for $14.99.95, please see the link in the description, and I will tell you which stocks are promising and which stocks are not promising. Again, my class is not snake oil. Look in the description. Click on the link that says, yes, I want to give you $1,500, and I will massage your ego, and maybe if you're within my bubble, I'll rub your shoulders while you trade stocks for about 15 minutes. All right, guys, I got to end this because I keep on rambling. I'll talk to you guys soon. Bye-bye. Thanks, Shelby.